What's up, everyone? Today is Wednesday after FOMC. So today was a perfect example of the sell the rumor, buy the news, right? So all of this sell off in Nasdaq or any risk asset for the matter, or the rally in dollar. Since last week, we've been basically pricing in the 75 basis point rate hike, which happened today. This bar right here. We just opened up a new day in the futures markets, and all the assets, all the risk assets is still rallying. I think I'm long a little bit of S&P, Nasdaq. Uh, I am short dollars as well. So this is a daily chart. So let's see. So obviously, when the news came out, we probed both sides. So this is when 2 o'clock. Typical. First, we rallied up. All the breakout traders who had brackets set on a buy above highs, they got trapped. Then then they turned around and ran their stops where you can see their stops were either somewhere here or somewhere here. So they got taken for the ride, and that's why you don't need bracket orders nowadays, because the algos will destroy you. In any case, our team traded well in at ApexBull at our signals. I think we had like 6, 7 winners, all in a row. So overall was a good day. What else? Nasdaq. All right. Well, let's just dive in and see what the hell is going on, right? So obviously, this is just a temporary rally. So this is Nasdaq long term. There's a weekly chart. You can see that it's still in the head and shoulders. It still hasn't played out, and I still think we're going to see this 200 weekly moving average for sure. Let's see the S&P. So same thing with S&P. I think that. Let me remove this. I think that this 200 is also on a weekly is a pretty decent target. As you can see, with every major sell-off, or with one in 2018, 19, the COVID one, we usually at least get to it. We can blast through it, but at least get to it. We shall. All right. So what is this? This is 16. This is 11. Oh, let's see what happened in 08. So as you can see in 08, we tapped it, tried to rally everything. Everybody thought that everything is hunky-dory, and I think this is going to be the repeat of this is what it's going to look like by the time we're done with this one. This is a weekly chart again. This is like a 3-4 months worth of price action right here. So I think we might rally a little bit. Everybody is going to start thinking, oh, well, maybe everything is fine and I should go spend more money. And whammo. And that actually in 1929 30s, a lot of people got taken for the ride the same way, because they thought that we bottomed, and when they had this bear market rally caught them off guard. They thought, oh, that's it, and I'm a bloody genius, and they bought they bought the lows, well, whatever they were accumulating on the way down. When it started going back up, they thought, all right, the party is back on. Let's start drinking, and lo and behold, they got cleaned out. And look how nice of a trap! A trend line breakout, and then couldn't sustain, started breaking down, and you can see that there was an indecision battle. See this bar. So this bar is larger than this bar. Now this bar is larger than this bar, and this bar just engulfs this bar, right? So all of them. This is a month, 4 weeks, right? A month worth of price action, back and forth, back and forth, back and forth between two sides, bullish and bearish, and then obviously the bears won that argument undoubtedly. So fully expect to have same type of shenanigans happening in the current stock market, not stock market, current recession overall, because We have now more debt than 2008. 2008 was more about subprime and real estate. Now we have an everything bubble because there was mostly a real estate that was in a bubble. Now we have absolutely everything in a bubble. But the thing is, everybody is also trying to be smart, and they are aware of 2008. They still remember it. People with at least with money in the market, they remember it well. So now they're like, all right, this time around, Mr. Market is not going to get me. And this is precisely what Mr. Market does. So it's going to create a false hope, a false narrative to sucker you into the longs again. And that's when it's going to really, really crash. Not right now. Because everybody, whenever idiots on CNN, not even CNBC, CNN, are yapping about all this, that means it's not there yet. It's not there yet, and the trap will be created by the market participants to trap the most amount of people. And if everybody's going to be ready for the trap, for the sell-off, it's not going to happen. So they will have to manipulate the price action, and by they I mean smart money, and in their some of participants of some of basically all of them combined, what we'll call smart money, right? So these smart money players, being institutional players with a big wallet, they will manipulate this price in such a way where you will emotionally think that this situation has resolved itself, and that's going to be the trap. But for now, everybody is it's too obvious. So when it's too obvious, that's what happened today. Actually, we were selling off. Everybody expected. Everybody knew that we're going to do either 50 or 75. In our Telegram group, I mentioned that this is what's going to happen at 50. This is what's going to happen if they raise 75, and this is what's going to happen if they raise 100. So we were prepared for all the scenarios, and that's what professionals do. They build out scenarios and see which one plays out, and did play out exactly how we predicted, and we made a bunch of money on it. So if you want to join us, more than welcome to stop by ApexBull.com. There's a link up on top for our free Telegram group where I post a lot of this free stuff. Anyway, so what's next? I'm still long. I think we got a little more legs to run, because look at this sell off. This sell off in stock indices or whatever. Let's do here. I mean, 38.2 around 3,800, whatever, 38.80 in S&P, very doable. So I'm long. I'm long at 37.80 or something. I don't remember. And I'm long US 30, not Nasdaq, I think, or maybe I bought a Nasdaq. There was so much action, so many trades that I already forgot. So I'm long. I was long around 380, I think. Right? Yeah. So I'm very nice in profit. Exactly 500 points, 5,000 pips, and like I said, with the S&P, this is looking quite similar. I think this is 38.2 after a steep sell-off like that is a very, very good target. Now, gold. Gold is just, I've advised all the people who are trading in our free Telegram group. I told them, if you're a novice trader, just stay out of gold for now, because it's trying to find direction. And it was visible with this megaphone pattern. Basically, we have we take out this low, a lower low, but then we take out this high, so a higher high, and then lower low, and a higher high again here. Now we have made a lower low. So every time we take out, we're expanding, and one of the sides will have to give. So if you're new, obviously with the inflation concerns, the reason why it's doing the megaphone chop fest is because there is, on one side, there's a crowd that says gold is an inflationary hedge, meaning you buy gold because the fiat currency money is becoming worthless since they printed so much of it. The inflation is eating it up, and gold is a store of value. On the other hand, there's the other camp that says, all right, well, due to the fact that Federal Reserve is raising interest rates aggressively, the inflation expectations will subside in the near future, and markets are future pricing mechanisms, meaning they don't price what happened yesterday or today. They're looking in the future, and that's where the price comes in. Um, so that's why there's a battle between these two camps, and I'm long gold myself, but I'm not. It's been just pain in the ass. So stay out of it. I know it's very popular among some traders, but just stay out of it. It's pain in the ass to trade. There are easier money to be made trading indices or the U.S. dollar. Speaking of U.S. dollar, so again, took out previous high after a steep rally, and every single time we have a steep rally into the previous swing high, I always say, how did the price get to it? Did it get to it fast? Did it get to it slow, gradual? So because this started to be so steep, as you can see, these moves were super steep. It was obvious that it's running out of steam at least, and obviously multiple divergences here. I mean, all of the classical signs of technical analysis you read about in the books. This is when you use it, when you have a steep rise, unsustainable move basically, and then obviously now we're consolidating and again trying to find direction, because high, 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 low, and now we're just about to take out the support here. So one of the sides is going to give. I am actually short. I think that we might correct a little lower for the same reason as the stocks and everything else, because of so something like this. If we see a breakdown, I think some kind of 50 to 32% correction of this leg up, so somewhere here or here, will be in the cards. And you don't have to trade the dollar index. You can trade this area or general area here, maybe even 6618. So you can trade euro dollar, you can trade pound, Aussie, New Zealand. I'm long Aussie, by the way. Why am I long Aussie? Well, so we are in this huge range, right? So I'm trading the range, 4 hour. As you can see, I'm already in profit. And after a steep decline into the resistance, we're now having a bounce. So I don't think it's gonna be a straight line shoot to the kind of like it was here, but the gradual, maybe it'll take 3-4 days to get up top here. Also, don't forget not tomorrow. Friday is triple witching. That's where the option expiration and futures and I think options on the indices. So all of that means all the instruments that are being used to hedge against positions, other long. So hedge funds, a lot of hedge funds, they are long only. That means they only buy, they don't sell, they don't go short. So they have to hedge their positions via options in order for them to take off risk off the table when obviously markets are selling off, because they do not short the markets, they just buy a long term. So, but why hold the bag while the market is going down? So they hedge their positions, so they lock in at the same level. So once every quarter, they have to unwound those hedges in order for them to again get into the new quarterly options or futures contracts, and that usually creates some volatility in the market. And I think this might be it's this Friday, and I think this might be a catalyst for pullback in risk, meaning stock indices up, the US dollar down, and Bitcoin. Wow, what a day with the Bitcoin! Jesus Christ, hanging to its dear life. Looky here. So this was previous 2017 high, December. We barely didn't make to it, and we just tapped a weekly. Um, 200-day moving average to the 200 weekly moving average, and this is exactly what the scenario I'm looking for in the stock indices. I think the stocks, Bitcoin and ETH, are leading the way, and I think stocks will also tap their 200 weekly moving average as well. So here we were short since, well, we were shorting most of this. And I basically said that around today, I in my Telegram group, I said that around 20,300 level, basically take profits. I actually said take half off and leave a rest at break even around 24, 27 or something like that. Obviously, this is also quite a steep sell-off from 30 to 20 in one swift move, and this is basically because it was pricing in, not pricing in, because 3 Arrow Capital getting liquidated, and a bunch of other Celsius is in trouble, et cetera, et cetera. So that means if those guys go, there will be more pain to come, because there will be others to follow, because they all borrowed money. When you borrow money and you're trading on margin on top of that, that's a double whammy right there. And they never thought that the price will be dropping so aggressively to these levels. So they always assumed that it will fluctuate somewhere around between mid 30s to 60,000, and then off we go to 100K, and obviously did not happen. So they're fucked. So I think there will be another. They might take it back up, but it's going to be a false rally. There's going to be another cascading effect down, flush out of all Michael Saylors of this world. They're going to get flushed out, and after they get flushed out, that's when we're gonna see the bottom, and that's when you should be going all in. Just not all in. Don't mortgage your house, but go heavy. In any case, hope it helps. As always, if you like the content, please like, subscribe, leave a comment, and I'll see you next time.